Traders, Todd here. Welcome to the free video update. And we put a trade in, put Butterfly to work here in crude oils. Here is a 195-minute chart on crude. And the way I'm looking at this is we have a nice little 5-wave move up here in 1. ABC set back in 2. We'll just let Motive Wave do the work for us. And we're now moving higher in blue 3. Now, blue 3, like wave 1, should be a 5-wave move, and we're just looking for the biggest corrections we can find. We've got a correction there and there. So that's good. The 1.618 Fib projection of wave 1 compared to 3. Let me just draw out the lines for you. So it's wave 1 up in 3. Traditionally gets into the 1618 projection, and that's where we stopped. We actually got a little through that, and we have the 200% at 52.40. We also have the major power wave sell levels on a 200 period look back here. These are proprietary indicators we use to kind of substantiate the fib. And we have the minor power wave sell level right here, and then the major just above. So we have a nice zone of resistance here in crude oil from 50.73 up to just about 53 bucks. Now, there's been a lot of supply cuts from Russia and OPEC, and they're really trying to boost up price. The problem is now you got a falling stock market, and the dollar's starting to rally. So those two things are working against it. So when you put it all together, we have fundamentals are strong for crude, but the intermarket perspective, the dollar and the stock market are going to work again. So for a fundamental reason, I think we're going to actually trade sideways for a little while. From a technical point of view, we should also trade sideways for a little while because we have the upside objectives for a third wave in place, which means we need to go into a fourth wave breather that should be similar in price and time compared to wave 2. So I've done all the studies for you, which is a wave 4 fib projection compared to 2, second wave and third wave, and there are your levels right there, okay? And I've also done a time comparison. All right, so we have a time comparison here of 4v2 and 4v3. It should really exist. The ideal timing would be from, let me just pull out my thing here, from October 17th out towards October 25th. So that's the ideal timing for the end of a wave 4. All right, and let me just pause this. Let me show you the ideal price for a wave 4. And I'm going to pull the price across, and we're going to figure out where price and time intersect. So there's price. All right, that's the ideal price. I'm just going to pull him across. And then here's the ideal timing from the beginning here on the October 17th out to October 25th, so about a week. And as we extend those straight up, okay, it's the intersection is the ideal price and time stopping point. So if I just pull him over right there, and pull him across. There we go. Okay, I'm just going to get rid of this first guide that we used. All right, perfect. And then I can even get rid of the fib. And what you'll notice is it also corresponds to the major power wave buy levels. These are the proprietary indicators we use to figure out support and resistance. So this is the ideal stopping point for wave 4. Okay, so the trade that we just put on, there's a lot going on here. I realize that. We did it in the USO just so we could have more option expirations, but we did a put Butterfly to take advantage of the move down into this Fibonacci price and time support level that, again, should match up with this wave 4, okay? So the trade that we put on is over here. If you look at the USO, we structure the body of the Butterfly right around the upper end of the fib support, which is at $11.35 in USO. So I used the 11.50, which is nearby. So I did the 11.50 put twice, bought the 11 puts, which is just below the fib support, and bought the 12, which is up here just above the major power wave level. So, you know, we have the Butterfly, the body of the Butterfly right inside of this Fibonacci price and time support zone. So this is what we did. We did the 11, 11.5, 12 put Butterfly. And obviously, the body of the Butterfly will be max profit at $11.50. That'll be $1,000 profit. Max risk would be $480 out at the wings, right? So that becomes 11 and 12 is where we will reach max risk. The break even would be $11.16 and $11.84. So as we go over there, 11, what did I say? 1184 is going to be right here. Okay, so just right around that 200% Fibonacci projection. And then 1116 is right about there, which is right where we should start to find support. So I fully expect this thing to kind of bounce from support, hang around in here. And if we could just go out October 21st, so that's when these things are going to expire. October 21 is going to take you right out into that area here. So ideally, we're starting to move up here right around 11.5 after the October 21st low. But if we can kind of chop around in here, collect some positive theta, we'll manage this butterfly as this wave 4 progresses. Okay, so that's how we handle. There's a lot going on there, but that's how you use Fibonacci price in time to structure option butterflies in fourth wave consolidations. All right. Doing this now on October 20th, and just updating you on this the position of crude oil. So we put a put butterfly to work last week into this wave 4 range. So here's the video from back there. It's like, let me just do that. Okay, so we're looking for crude oil to go from like 51.5 down into the $50 region in this highlighted zone of fib price and time support. Well, that's exactly what happened. We held that highlighted zone. So looking pretty good. USO is overlaid there in purple. We're right at 1152. So we got to take the trade off, and I'm just kind of work you through how we're going to do that. We're long the 11 puts, short the 11.5 puts, and long the 12 puts, which gives you a put butterfly. So we have twice as many of the short 11.5 puts that we're long in the wings, 11 puts and 12 puts. So altogether, doing fine. So what's cool is the body of the butterfly. We're short those contracts are trading at 8.5 cents. So what I'm going to do with our customers, and I just sent the text message out, is to go ahead and put an order in to buy them back. And I'm going to put in a nickel bid because anything a nickel or less when you're buying back short options will be commission free. And I'll make that good till canceled. If you pay 6 cents or more, you're looking at a $90 commission bill. So that's fine. So I'm just going to send that over. The 11 puts are only worth a penny. So, there's no sense to sell those because if I sell them at a penny, I'll take in $30 from, $1 per option contract, and I have 30 of them. But they're going to charge me $45 in commission, so I'll lose $15 to book profit. So that doesn't make sense. So I'm going to leave those guys as is. And then the rest over here, the 12 puts are still worth 48 cents. So when I'm filled on these, I'll also close those long 12 puts. So altogether, decent trade, $540 for really just a sideways wave 4 market. Okay, so that's pretty good. Hope that helps, guys. I will catch you on the next video update. See ya.